Michelle, I talk about uncertainty. Donald Trump very certain we're going to see a growth of 5%. Walk us through your forecast and tell us why you've revised it down.
Sure. So the way I'm thinking about it is you have near-term and medium-term impacts of the change of the administration, the change of policy in Washington. Our gut reaction was that, faced with the change, the uncertainty around President-elect Trump, that our strategists were assuming you'd have a risk-off event in the markets. Clearly, that has not happened. It's been the exact opposite. So, we're going to have to stay pretty nimble here. Assuming it was a risk-off, assuming high uncertainty, our view was that that would be weaker for economic growth, leading us to revise down forecasts for the first half of the year. If it proves to be that financial conditions continue to behave favorably, if we have a further rally in the stock market, if generally everything is being taken as a positive, then I think maybe there's actually upside to the near term. So, as you think about the medium term, the policies become a lot more relevant.
Yeah, I mean, it's pretty bold to change your forecast right now in the middle of all of this uncertainty, I guess. Michelle, what is that forecast give it to us, and and then we'll move on.
Sure. So for economic growth next year, we think we're going to see somewhere close to 2% growth. But I think what becomes interesting is what happens around the trajectory, or that potential for acceleration. And that's where, Vani, the policies that could potentially be implemented really matter. So will we see the administration move towards fiscal stimulus, lower taxes, infrastructure spending, which could be quite supportive of growth? Or will we see a move towards more of the policies that are exacerbate trade tensions, immigration policies, which would be a net negative? So at this point, there's many different paths that I think are out there, and we're going to have to wait and see for what actually gets implemented.
A huge part of that is what happens in Congress. Jim Bullard, the president of the St. Louis Fed, speaking this morning, said having a Republican House and Republican Senate certainly breaks gridlock. His words, you don't have divided government. So playing off of that, what are the prospects, do you think, for policy getting through Congress? It's been hard over these last few years.
Yeah, and I think that's really important, and that's one of the big consequences is that we went from a period of several years of gridlock, tension, fights around passing budgets, around the debt ceiling, a lot of the policies and even nominations were hard to get through, to one where we no longer have gridlock. And that's an important shift. That means that we will be able to see some policies, presumably be able to pass a budget without much noise in Washington. And that helps to support confidence. Perhaps that also helps to support, business investment. So that certainly could be a more positive story for the medium term as well.
Does the Federal Reserve play any role here at all then, Michelle, whether or not they increase in December?
Yeah, so for the December call, I think what the Fed has told us is that they, all else equal based off of the data that they've seen, based off of financial conditions up until the election, the coast was clear for them to hike in December. So, unless something changes more negatively, so we have, further deterioration of financial conditions, higher uncertainty, I think that the Fed will have a very difficult decision to make. So our gut reaction after the election results was to say that the Fed would look to delay in the face of a risk-off event in the markets. But if financial conditions become more favorable, then the Fed certainly can go in December.
You've got to think here that among policymakers, there must be the impulse to wait now amid all of this rhetoric about a large fiscal stimulus, about an infrastructure package. Wouldn't the Fed be inclined to wait and see what effect that has on the economy? At least see what the size of it's going to be.
I think that that's going to impact the trajectory into next year. I think the December call is much more about the data we've seen thus far, and it's about how financial conditions are behaving over the next few weeks. And there's a lot of uncertainty in that, right? So I think that the December call is a difficult one right now. But as you look into next year, the policies become really important. Will we see policies that support real economic activity? Will we see policies that support inflation? That will dictate the path of the hiking cycle. But until we know what those policies are, and until the Fed sees how that impacts the real economy, I think the tendency will be to be cautious in the near term.